we think about charitable giving, we think of writing a check. We think of going to a golf event or a gala and pulling out our checkbook and writing a check in order to support this organization. We aren't looking for what really makes up somebody's net wealth. So we like to use the idea of an iceberg. When you see the tip of an iceberg, all that you see is just the tip. You're not seeing all that's below the surface. And so when we are asking for charitable giving, we want to ask from someone's entire net wealth. What makes up their wealth? What are their assets that they are able to give? So rather than only asking for that 9%, less than 10% of somebody's net wealth is actually going to be in cash or liquid portfolios, I should say. And so what we want to be able to look at for charitable opportunities is those appreciated marketable securities, that real estate, oil and gas, agriculture, business interest, privately held business interest, S Corps, LLCs, partnerships, C Corps, all kinds of different privately held business interests, even life insurance. There's a lot that's going to make up somebody's net worth that we can ask for charitable benefits. And these assets that are below the surface that we don't typically think about for our charitable giving actually have a double tax benefit. You can completely avoid capital gains when you donate one of these assets or a portion of one of these assets. And the donor also receives a fair market value charitable tax deduction. So let's just take a simple example of that appreciated Apple stock that you've been holding on to for years, because if you sell that Apple stock, you're going to have to pay significant capital gains taxes on the appreciation. So if you're going to sell that Apple stock, you're going to have to pay capital gains. Whatever is left is going to, be available for giving to charity or investing elsewhere. If you give cash to charity, you will get a charitable deduction. What WaterStone recommends is donate that Apple stock to charity. Donate the Apple stock. When the charity sells the Apple stock, WaterStone, for example, is a 501c3 tax-exempt entity. When we sell that Apple stock, we will not need to pay any capital gains. That entire amount is going to be used for charitable purposes. So instead of paying that amount to the IRS, to the government, we're now sending that money to our favorite charity. And the donor also still receives a fair market value charitable tax deduction. So you get a charitable tax deduction for the value of that Apple stock on the date that you gave it. It's technically going to be an average of the daily high and low trading value of that stock, but it's a really fantastic way to receive a charitable tax deduction and also avoid those capital gains. Very similar concepts work with other assets like real estate or oil and gas, business interest. The business owner that maybe they have a dental practice or all kinds of different privately held business interests that can also be available for